What's up, YouTube? Welcome to the Credit Plug channel where we talk about how to build credit, how to establish relationships with banks and financial institutions, and most importantly, how to get you access to high limit credit funding. If that's something you like to listen to, then we definitely welcome you to subscribe. We put out a host of different credit and financial related videos, so you could always support our channel if you just like, share, or comment right down below. It helps our content get out to a much wider audience, so we appreciate any support. I also want to just give a big shout out to all of our followers or subscribers rather. This is YouTube, who've helped us grow the channel and get information out there. It's very appreciated because financial education, in my opinion, is one of the most important types of educations that we could receive. So definitely very grateful, and I want to continue to grow the channel, and I hope a lot of you are also benefiting from some of the value and the information that we're dropping. So before I get into today's video, I was a little bit on the fence as to whether I would share this particular information, but I figured I'd be doing you guys a big disservice if I'm not sharing these gems with you. So, go get a pen and a paper, pause the video right now, and take some notes on what I'm about to cover in this video. So normally we cover credit unions, credit cards, and banks. This video is actually one of a kind because the type of institution that we're going to cover is actually a first for the channel, and that is CDFIs. So CDFIs stand for Community Development Financial Institutions. So they're essentially an institution, and actually like a 501c tax designation, but they're nonprofit financial institutions that generally serve a social mission. Now, I actually got my start in my career working for a CDFI. So the CDFI that I worked for, like 12 years ago now, I'm showing my age, was the Calvert Social Investment Foundation. I'll post a link in the description, you guys can check it out. But Calvert Social Investment Foundation, or otherwise known as Calvert Foundation, is actually one of the larger CDFIs in the country, and they lend to smaller CDFIs. So they're kind of like a fund of funds. They're a much bigger organization, and they divvy up their capital, generally loaning it out at 0% interest to these other smaller institutions. And like I said, they're usually a social mission. So some of the different types of social missions that they focus on are like affordable housing, social enterprise, women-owned businesses, microfinance, international microfinance, clean energy investments, things like that, where there's a social benefit from that investment. Now, the reason why I'm just mentioning this is because I actually found a connection between where I got my start in my career with a particular institution that I came across, and what I'm actually going to be covering in this video when I was doing a little bit of research recently on PayPal's $530 million initiative to invest in Black-owned businesses. So in that press release, and as part of the 530 million, there was 5 million that was set aside for grants to different nonprofits and CDFIs for like community outreach and financial literacy and education. So I was looking at a couple of those in the list, and I come across a CDFI called Baltimore Business Lending. So I went to check them out, and they actually have two great loan programs that I think all of you guys need to be aware of. So they have a Emergent loan fund and a growth loan fund. So first, the Emergent growth loan program is basically for startups or businesses that are less than 2 years old, and so you can get a minimum of 10,000 all the way up to 50,000 in terms of a loan, with terms of 3 years all the way up to 7 years. With the Emergent growth loan program, it's businesses that are greater than 2 years all the way up to businesses that are 5 years. And so you can get a minimum of 50,000 all the way up to 150,000, with terms as short as 5 years all the way up to 10 years. And interest rates are at a fixed 9.25% interest rate. And check this, if any of the business it has at least a 20% women ownership, then the interest rate is 7.25. So it's actually a 2% interest rate reduction for women-owned businesses, which is excellent. Definitely something to check out. Now, the kicker with this is the actual lending criteria. So according to their website, all they require is for you to have a good business idea and reasonable credit. And the reasonable credit are borrowers who've made consistent payments for a period of at least 1 year prior to the application, and no bankruptcies that have been discharged within the past 2 years, as well as no outstanding tax debts. So that's pretty easy, for the average consumer or business owner to qualify for. There's no specific credit score criteria, which is great. Also, as part of their loan program, they also do require you to attend a financial education course, basically where and this is typical with like CDFIs. They just want their borrowers to be or to have some type of education on finances and borrowing and things like that. In terms of the use of funds, so you could use the funds to do to lease a space for a build out, to purchase inventory, supplies, materials, lease furniture or machinery and equipment, as well as refinance other high interest debt, or just as general operating or working capital. The loans cannot be used to purchase real estate or for real estate construction or development, and you can't use the funds to purchase a franchise. So those are just some of the restrictions that you need to be aware of. Another key component is that the business has to have a principal office location in Baltimore City. Now, for those of you who may be out of state, here's one trick that I'm gonna share with you. Not even really a trick, but you can do what's called a foreign entity registration. So if you're from out of state and you come across Baltimore Business Lending, and you see that the requirement is for the business to have an office in Baltimore City, what you can do is get a virtual address and then file a foreign entity registration. So when you file a foreign entity registration, you're basically officially establishing a presence in a particular state through the Secretary of State. Basically stating that you have legal right to operate within that state. So that's one way of getting around that. And usually the filing fee is somewhere around $100, maybe $150 if you expedite it, and a virtual address might cost you, maybe another $100 or so. So in addition, there is a checklist of items that you need to prepare as part of your application. So for startups, you're going to need a list of startup costs, and you're going to have them all itemized. So before that, you might want to get some quotes on different materials or items that you plan on purchasing. And then you're going to need the most recent quarterly balance sheet, as well as 3 years of monthly cash flow projections, the last 2 years of current and profit and loss statements if you're an existing business, and also for existing businesses, federal income taxes with all schedules included for the last 3 years, business bank statements for the last 3 months. And then for the personal requirements in terms of documentation, you're going to need a personal financial statement. You're also going to need the last 3 years of federal tax returns, the 3 most recent personal bank account statements, and proof of citizenship or permanent residency. And in addition to that, the loan payments will have to be withdrawn from your business bank account. So you will have to provide your business bank account and your monthly payments will just be withdrawn from there. And this is something that you will have to be in person for, so you can't necessarily just do the whole application online. So that's just one thing to keep in mind. Oh yeah, and another thing too. So even though there's no collateral, what is required is that they will do a UCC financing statement filed against any of your business assets, and you will have to personally guarantee for any business owners with at least 20% ownership. You could also utilize co-signers as well if you want. So that's just one thing to keep in mind as well. But other than that, if you have a sound business idea or a sound business, definitely consider Baltimore business lending. I'm going to be covering a lot more when it comes to CDFIs, because I feel like that's definitely one area that's really, really overlooked, unless you really know that they even exist. And there's tons of CDFIs. Usually they're going to have a local presence. So definitely research some in your area, because like I said, they're going to be much easier than your traditional commercial banks and lending in terms of standards. A lot of them are not going to require collateral, so there's definitely a lot of value. If there's anyone who has any experience with Baltimore business lending, definitely let us know in the comment section right down below, which I'm not sure there are too many people out here, because I'm just finding out about this. So definitely check it out. I'm going to post a link in the description of the video. And if you have any comments or questions, just let me know right down below. Until next time, y'all take it easy, and we'll talk to you soon. Peace.